Hey everyone, hopefully you're having a good day. My name's Andy, my channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in there, take a look, and see what people are sharing. If you want to follow me at Finding_Finance, if you want to join our community, finding-value.com, where I dive deeper into potential investment opportunities, individual companies, sectors. A lot of people ask questions about real estate cycles, other cycles as well, technical trading, and all sorts of stuff. So Brandon says, okay, I'm going to call it. We're in a breakout mode in tin. 9 consecutive bull bars with above average buying volume. You love to see it. So this is tin. You can see it right here. If you've got were to put a line across here, that's a breakout. And we also have support coming in here. So it was a pennant formation, came and squeezed into the corner here. You get 1, 2, 3 hump consolidation, and then you get the breakout. And that's what tin possesses here. So it looks really good for tin breaking on out. There isn't too many ways to play tin. There's like one major producer that is focused on tin. I can let you guys know that maybe tomorrow during the midweek update. Our crude draw estimates this week. So HFI Research estimates that we would have a 2.79 million barrel draw for the net result. And I don't know if that's true. I mean, we'll see what the net result is if we get a inventory addition or a deficit or subtraction. A draw. Consumers have now run out of excess savings, hitting levels not seen in 5+ years. He says this won't end well, but he's been bearish for a pretty long time. It doesn't mean that we won't end up in a slowdown, though. Household excess savings. This is household excess savings as share of GDP. It is negative now, minus 1%, perhaps 1.5%. Do you agree with Warren Buffett? He says, billionaire Warren Buffett says he could end the United States deficit problem in just 5 minutes, and could probably end it quicker than that. He just passed a law that says anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election. We know how the members of Congress really like being members of Congress. So maybe that solves it, maybe it doesn't. Dave Collum says, just had a long chat with one of my most prominent bear market money managers from the dot-com era. He is now heading out of the country, convinced it is time to put some distance between him and the United States. I actually know some people who are very wealthy, and they actually moved out of the United States as well. So that seems like a common theme. People are leaving the United States thinking that maybe something bigger is coming. And maybe even more dangerous in the United States. But I don't know. I think it's kind of coming everywhere, in my opinion. If the United States has problems, I think it's going to show up all over the place. The Kobayashi letter says, U.S. house prices have risen in a straight line in Q2 of 2024. The median sales price of homes sold hit another record high of $397,954 in June, according to Redfin. This is about a 5% year-over-year increase and a 17% spike in 3 years. At the same time, the median asking price rose 6.1% to $409,975, the biggest jump since October of 2022. This triggered pending home sales to drop by 5%, the largest decline since February. U.S. housing affordability is somehow still getting worse. So median sales price up 5%. I thought we were going to get this big slowdown. Now, things are deteriorating. I completely agree with that. Home sales have slowed, but we need more inventory for that to impact the median sales price for it to actually go down. So what we're seeing is inventory is still low when you look at it from the entire United States, and it's still increasing. But inventory levels have to hit a certain level It's generally 6 months and above where home prices level off or potentially could go lower. About 6 months of inventory. The Kobayashi letter says housing affordability is at its lowest levels since the 1980s. Back then, mortgage rates were more than double what they are now. The housing affordability crisis is still getting worse in 2024. Let me go back here. Here we go. There's a silver squeeze still brewing in Shanghai. It says silver's getting out of stock. So this is China's warehouse stock, Shanghai Future Exchange, silver from 2012 to July of 2024. I don't think that's 2012 to 2024. In this chart, what I see is 23, 24, and it's just going down to zero. It's at incredibly low levels. Whenever you hit low levels of inventory, that is when the price starts to spike. If that demand continues to be there, and you're continually running deficits, the price just goes ballistic, Goose. It goes ballistic. So we're at that point where inventory levels are at critical levels for Shanghai warehouse, and I suspect that prices will continue to go higher. Egon van Greyers, he says, a simple method for measuring the massive wealth destruction and the transformation that especially the West will experience in coming years is the Dow to gold ratio. In his opinion, he's got a red line going down where we could see a big move lower where gold outperforms the Dow Jones. So he says this will be gold 10,000, Dow 5,000, or gold 20,000, Dow 10,000. Something on the lines of that to get that ratio down to 0.5. Kobayashi letter. So this is a summary of the Fed Chair Powell's testimony. So there's 6 of them. Quarter 1 2024 data did not support confidence in inflation and path to rate cuts. Rate cuts are not appropriate until greater confidence inflation is heading to 2%. Cutting rates too late could unduly weaken the economy. The U.S. economy is expanding at a solid pace. That is obviously his opinion. Labor market conditions have cooled but remain strong. Elevated inflation is not the only risk we face. The Fed needs more data before beginning to cut rates, is what they are saying. Unusual whales. We've got the average purchase price of a single-family home is $505,750 according to the U.S. Census Bureau. The mortgage on a $500,000 house is $2,952 per month toward your mortgage principal and mortgage interest, assuming a 6.86% interest rate and a 30-year fixed term with 10% down. The only thing I wanted to say here is it's important to get in the game. So I got in the game, it was, I don't know, probably eight or 9 years ago, something. No, not that far. Maybe 7 years ago, something like that. So about 7 years ago, and what I wanted to do is I wanted to get in the game. I want to get a house. Whether house prices go up or down, it doesn't really matter because I'm in the game. And I've got equity in my house, and I'm just letting it sit there. I don't really care about it. But if I wanted to sell my house and buy another house, I can use that equity as a down payment. And my mortgage would never be this big because I put way more. I could put, 50% down or something. The hardest part is to just get in the game. Getting in the game, that's the hard part. It's to get that big down payment saved up to get into the game. Then after that, prices can go up or down as long as you don't owe more on your house than what you have on loan. I think you'll be fine. But getting in the game costs a lot right now. What I'll say there. Powell translation, we're stuck. If we loosen rate policy, we risk destroying the progress we've made on inflation. We keep rates elevated, we likely blow up parts of the economy. That's pretty much the translation, yes. I don't know how Powell gets out of this. If he lowers rates, I think inflation will go ballistic. But what he could do is leave rates where they're at for a really long time, have that yield curve inverted for like 3, 4, 5 years, and then everything just moves slower. And there will be parts of the economy that probably do blow up or do have problems. Art Berman, electric vehicles only expected to account for 7% of light vehicles by 2030, 12% by 2035, 17% by 2040. And that's electric vehicles growing there out in the future, all the way out to 2050 is what they've got out there. Money wisdom, it says, the more you learn, the more you'll earn. Warren Buffett. Another quote, free education is abundant all over the internet. It's the desire to learn that's scarce. And that's another famous investor. Burrick says for Palladium, another view, falling wedge and a breakout for Palladium. We could get a retest in the short term, but it's looking pretty good and potentially could be bottoming here. I know a lot of people will say, Andy, I thought Palladium's out of favor. It still is. It doesn't mean that it can go into a bottoming process. It can still look good, and the ratios can still change favorably for other metals where they outperform Palladium. But Palladium does look like it's trying to put in a bottom. The Crude Chronicles, it says, has oil and gas ever had an NVIDIA? The simple answer is yes. The company that immediately comes to mind is Schlumberger. During the 1970s, Schlumberger was the stock of the period. Its performance was so strong that it decided to buy a tech company, Fairchild Electronics. And if you believe in history repeating itself, check out the following excerpts taken from the 1979 annual report. And this is the annual report down there. But I do think that the market conditions are similar to the 1970s. I also think that we have incredibly low or cheap energy service companies when you price these things in ratios. We could replicate something like this over the next 10 years where we get a big outperformance of energy service companies. I think that is probably the likelihood. So the next NVIDIA hidden away in energy service companies could be developing itself right now, and hopefully it is one of the companies that I've selected and it's in my portfolio today. Fingers crossed. The EIA has global oil demand at 103.8 million barrels per day, but they also have the global oil supply at 101.98 million barrels per day in June of 2024. That's a pretty big deficit. Eating through the inventory. That's what moves price, guys. Savings account are paying about 5.25%. If you simply put $2 million in one, you can literally make $250,000 a year to live on. Why aren't more people doing this? Well, I don't think too many people have $2 million liquid. I think that's probably step number one, is to obtain the $2 million. Step number two, the question is, what is the real rate of inflation? If the real rate of inflation is greater than 5.25%, you're just losing purchasing power at a slower rate. And there are other opportunities to invest in other investments that pay dividend yields that are greater than 5.25%. Some of them as high as almost 20% or greater. So I prefer to invest in those, collect a larger yield, and also have the potential for that yield to go up. It also has the potential for that yield to get cut. So there is some risk in doing that. But I don't think 5.25% is high enough for me personally to get too excited over that payout. If it was paying 15% or something like that, then I would get excited, and then you'd see me start to put money in it. If it was stable there, if it's continuing to go up and the dollar looks like it's going to go to nothing, then no, I still wouldn't do it. But it all depends what inflation is at that time. The EIA STIO, so Permian oil production flat since November of 23. That's a pretty long time. November of 23, and you can see the sideways movement of production for the Permian formations. Are we peaking in shale here? I think there's some people that think we're peaking. My opinion is that I don't think we know yet. The real true test is if oil price goes up to say like 125, 150, it just turns everything on, then we'll see if the Permian's peaked or not. We have to see a higher price for me to say, yes, we've in fact peaked. And here's oil. Speaking of oil price, he says it tried to pop the coil last week, but dropped over the last 3 days back inside the pattern. This is the resistance level that he's talking about that we tried breaking out, but it's come back. We're back within the pattern again. So come on, oil. Let's break out here. Let's see what we got. Smart people are the ones who ask the most thoughtful questions as opposed to thinking they have all the answers. Great questions are as much a better indicator of future success than great answers, says Ray Dalio. Some more quotes here. You also never want to be emotionally in a position where you pull the rug out from under yourself. You don't want to let your own fears or emotions cause you to sell at the wrong time. And then Howard Marks says the great investors operate in an unemotional fashion. And that's what we've got for today, guys. That's where we're going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. And we'll catch you next time. This is Finding Value.